Good evening to everyone. My name is Gaurav and I'm going to be the host for today's webinar. Right. So we're waiting for some more attendees that we are lined up. So we'll be getting back to you shortly in the next 5 minutes. We'll be starting up. Hi. Good evening to everyone who's attending the webinar today. My name is Gaurav once again. Gaurav Saini. I've been a part of MTrading for the last 5+ years, and I do have a lot of clients who are currently joined. And this webinar is going to be more of basic, training where I have a lot of clients who've been inviting and sending in more clients. So these are clients who are mostly new. So this is going to be very basic. There may be some clients who already know about the business. Maybe this could be an additional piece of information that you get out here on this webinar today. So the topic for today is how to trade with calculated risk and what is risk management in basic when you talk about trading, right? So the word risk management itself brings me to a few factors that you use on the MetaTrader 4 or your trading platform. So those factors that we need to be considering are your used margin and your free margin, right? So for traders who are new, who know very little about this business, the higher your backup in this business, the lower is your risk. So I do come across a lot of clients who would ask me that, let's start with minimum. Let me trade with $10. Let me trade with $20. Right. One of the key things that these traders need to be understanding is in this business, the higher your backup, the lower is your risk. So the question that you need to ask yourself before stepping into the real market is if you really want to trade with higher risk or lower risk, right? I'm going to explain to you what is used margin and what is free margin on the MetaTrader 4 platform or the trading platform as we call it. So let's look at gold for instance, right? If I'm buying, the price for gold right now is 1867 point something, right? And the quantity here is 1. Okay, let's say I am buying one quantity on gold, right? As soon as I place this order, a lot of things change out here, right? So the primary thing that I want you to look here is the used margin, which is showing up as $633, right? Now this is a demo account with like $5,000, and I want my new clients to kind of understand what is used margin, right? Used margin is nothing but the amount that you're utilizing out of your account to open your position. So when I talk about trading, when you deposit a certain amount and you start your account with a capital, let's say a client starts with a capital of $5,000, right? It does not mean that he's invested all that money in the market, right? Out of those $5,000, I get to choose how much do I really want to use to open my position, right? And that amount, which is right now $633, is being utilized out of the $5,000, which means I've roughly used 10% of my amount to open this position. But what about the rest of the amount, which is the 90%? That 90% amount is acting as a backup, right? What I mean by backup is when you buy, let's say maybe 100 quantity on gold, whatever the movement downward, because I'm buying, whatever movement that happens downward on the gold prices, the loss gets accumulated from the free margin. Right. So if I have a higher backup, I may be able to hold my position and I may be able to get the same position back into profit. Right. Another aspect that I really want, these new clients to understand is, how much profit should I be expecting on my trade? So if I have to ask a question to all my clients, let's say if you start your account with $1,000, how much, according to you as a client, do you expect in a month as returns on this amount? So I see some clients have replied that the return that they may be expecting is close to 600 to 700 USD, right? I think this is Mr. Vishwas P. So okay, again, when I talk about $1,000 capital and I talk about a return of almost $600, that's a 60% returns in a month, right? Now, I rarely know of a business that gives you maybe a 200 or a 300% returns a month. So in a way, Mr. Vishwas is close to being right. So there's nothing being right or wrong in this business, but yes, again, your goal really decides your risk appetite or the risk that you're trading with. For example, if my capital is $1,000 and I want to target a profit of maybe $3,000 to $4,000, that's going to be more like a gamble. That's going to be a lot of risk involved trading, right? So it is highly possible that you might, in that process of targeting $3,000 to $4,000 of profit, you might lose those $1,000 that you have available. Instead, if I look at a profit of maybe a minimum of maybe a 10% or a 15%, I'm still beating the inflation. Now, one of the key factors that all of you need to be understanding is, why are we trading, right? A lot of clients think, this is to make money, but yes, making money is another aspect, but beating the inflation rates is another aspect. So, if I'm earning money every month, if I'm doing a 9 to 5 job, I'm earning money every month, and I'm only saving that money, right? If I'm only saving that money, uh, with the inflation rates, and I think inflation is a word that you've been hearing for the last 1 or 2 months very often. What is inflation? Inflation is, in Hindi, if I have to explain to you, or maybe it's the cost by which every basic goods that you buy gets high. For example, maybe 30 years back, I could buy a house in India or any place else, maybe for like maybe a 1 lakh or a 2 lakh rupees. Can I buy a house today in India with that amount? Absolutely not. That amount may not be even enough for me as a down payment. That is because the value of money is reducing. That is why I need more money to buy that same asset. That is inflation. So if I'm only saving money and I'm not investing that money, the value of my money is actually going to diminish, right? So the whole concept of me saving that money it's not going to be accomplished. Imagine two individuals 30 years back, each with a capital of 1 lakh rupees. One decides to buy a house using that capital. Another person thinks, let me lock up this money in a cupboard and forget about it, right? Imagine 30 years down the line, today, the person who invested the money to buy a real estate asset, the value of that money has really appreciated. But about the other person who locked up the money, has the value of money appreciated? Absolutely not. The 1 lakh rupees then remain 1 lakh rupees today, but the value has changed extremely. So that is why I'm not saying that trading is the only industry. But yes, when you talk about trading, when you talk about MTrading in specific, or you talk about any other trading platform in the international market, the best advantage that you have here is the leverage, right? I'm not sure if a lot of people know what is leverage out here, but on our trading platforms, you have a leverage of 1:1,000, and I'm very sure there's maybe very minimal brokers who offer this kind of a leverage. Now, what is leverage? Leverage is basically your trading power. For example, let's look at my screen. If all of you are able to view this, I'm looking at an instrument called Nasdaq. Now, when you go through news websites, you must have heard this name really often, right? And this is one of my favorite instruments. Uh, the sole reason is that this instrument has been strongly bullish from the time this instrument exists. Now, what is Nasdaq? Maybe if you trade in the Indian market, you may have heard of something called Nifty, right? Which is the index in India, which is also called Nifty 50. The name itself suggests that it involves the top 50 performing companies in India. Similarly, when you talk about Nasdaq or Tech 100, you're talking about the top technology 100 companies from the US, right? So just I'm going to share what are the components for Tech 100. Just give me one moment. So I think 1 second. So if all of you are able to see my screen right now, I'm going to type in Tech 100 components. So when I say components, these are the stocks or the companies listed under this index, right? So like I said, these are top technology 100 companies. I'm talking about companies like Google, Apple, Microsoft, Amazon, all the top, multi-million dollar companies, right? The blue chip stocks, as we call them, right? Stocks that a lot of clients have trust in, right? So to be very frank, I have clients who bought Google stocks at a price of maybe $600. When let me also share another screen where I type in Google stock price, right? I come up on this graph and I change it to a different time frame here. Let's say 5 years, right? So I use my mouse to scroll and I see 5 years back, that is in 2017, the price for this stock was around $970 per stock, right? So imagine if I am an investor, a long-term investor, and if I put in my money on Google as a company. Now, why Google as a company? I want you guys to understand how big Google is today, right? I'm sure all of you know about Uber as a cab aggregator, right? This company, Uber, is a multi-million dollar company in itself. It has global presence. Uber is not only existence in India. It is existent in countries like UK, US, right? Now, a company this big relies on Google Maps for its smooth functioning, right? How do you book an Uber? You use your Google Maps. You tell them your location. Imagine if Google Maps did not exist. It could have been a very hassle involved job, where you would have to kind of tell the driver to come up to your location, and maybe a lot of things have been simplified because Google Maps use, including Uber. So that's how big Google is today. Another aspect that I want you to look at is YouTube as a channel. There are people who make millions of dollars just by posting videos on YouTube. YouTube is a part of Google. That's how big Google is today. Now, it is all about understanding the business fundamentals. When you invest in the Indian market, you would think that why would I invest in this company? I need to know how big this company is or how big this company could grow, right? So similarly, Google, when I talk about it, the long-term approach on these stocks are strongly bullish, because there's no stopping to the amount of growth on these stocks. Another example is Facebook, right, which is also called Meta as of now. I'm sure every one of you has a Facebook account, but have you kind of sat down and understood that as to how Facebook really makes money, right? When you and me register an account on Facebook, you don't need to pay anything, right? But Facebook is a platform, or maybe a community, right, where people join in, and then Facebook comes and puts up advertisements, right? So that's how Facebook is making money, through those advertisements, through those business advertisements, including India alone. Imagine the number of small businesses that are paying up to Facebook to advertise their business. Imagine the amount of money or revenue that Facebook is generating. Imagine the amount of growth that Facebook may expect in the next 5 years, right? So again, a lot of people do come and tell me that, I've lost money. I think trading is risky. For all those people out there, you may want to look at long-term investing with companies like these, which have strong business fundamentals, right? So for example, if I look at when Google started, maybe let's not go that back, but let's say maybe 10 years back, if I were an investor, and 10 years back, if I'd have invested in Google as a company, but the price was anywhere close to a $300, and today the price itself is here in front of you, $2,300. That's almost 8 times the money that you invest in the last 10 years. That's still a good amount of return for you, right? So those are things that you may want to consider. Now, another aspect when you talk about risk management is the amount of margin that I use. For example, if I'm opening a trade with $5, right, what amount of profit can I expect on it? Can anyone answer? Can anyone take a guess? So I see a few responses where I see if I'm investing $5, my profit could be a 20 to a $50. Mr. Vishwas again. Okay. Uh, okay. So when I talk about making a profit of $50 using a used margin of $5, that's 10 times the money. Talking in terms of trades, let's talk about in terms of great trades for you to understand it better. 1 second, let me exit this trade. Okay, let's look at a very small quantity of a trade on gold, right? The smallest quantity, I assume. Let's go to gold. So I believe now all of you are able to see the screen. Okay. So I'm looking at a very small trade. This is ZAU USD. ZAU XAU is also the symbolic name for gold. So a 0.01 is what I'm looking at, which is the smallest quantity that I've been investing on gold. Now I want you to look at the equity and the free margin. The equity is somewhere close to 4688. Now when I place this trade, all I've used out of the account is a $3, right? I've only used $3 to open this position. Now the quantity is a 0.01. If the market goes up by a dollar, right, I may expect a profit of around 10 cents or 1 cent, right? So ideally speaking, if I'm opening a trade with one quantity on gold and I'm looking at a profit of $50, I need to wait in the market for a $50 movement to be completed, right? Now, how big is a $50 movement on gold? If I look at the daily time frame on gold, I may be able to see that on specific days, I may be able to see that the gold prices move in a range of maybe $8 to $10, right? So for me to target or achieve a $50 profit, I may have to wait for 8 to 10 days, right? But then do you think the market is only going to keep going up? No, right? So the whole concept is about percentages. You've got to be treating this like a business, right? So when I talk about a business, I have a certain amount of capital invested, maybe $10,000, and based on that capital, I target a certain percentage, maybe a 5% or a 10% growth every month on that capital. Now, 5% may look like a small amount, but imagine when you keep your funds in a bank, the bank may offer you maybe 4% or 5% interest a year, right? I'm talking about the same amount of returns that you may be able to target 5% minimally on a certain capital. Now, even these 5% returns can be compounded. When I talk about compounding, I believe all of you know compound interest, and all of you may have heard that compound interest happens to be, the eighth wonder of the world. So I'm going to give you a much real picture and much calculative picture of this. I just want you all to look at the screen right now, just 1 second. So I'm going to be logging into a website which is normal website. I don't want to be using this term a compound interest, but I'm talking about compound growth out here, right? But maybe this may be really helpful for all of you to understand. So let's assume I am an investor or a trader, and I start my trading account with a capital of $1,000. So that's how I put in my amount as $1,000. My growth rate is, let's say, 5%, like I discussed, and I change this to monthly. Let's say I keep repeating this process. So what I'm doing is I've invested $1,000. I'm planning, or I'm targeting. I'm not saying that you will make 5% returns. I'm saying that you target 5% returns in a month, right? Which is a very small amount. $1,000 on a capital of $1,000, 5% returns is $50, right? So I come back, I look at a period of 60 months, right? The compound interval, I look at it as a monthly, right? Now, what I'm trying to explain to you guys out here is, if my capital is $1,000 and I'm targeting only a 5% returns a month, and I do that for the next 60 months, which is 5 years, right? What could my amount grow up? This is what you may have available. I'm talking about $17,000 that can be made. Now, how is this being possible? This is because of the compounding, right? Where you've invested a small amount of capital and you keep growing it by a certain percentage, a minimum percentage that is 5% every month, right? You can still have maybe $17,000 available, right? So this is one of the concepts that you guys can use and keep growing your account slowly and gradually, right? Another aspect that you may want to look at is time frames. So let's move to the MetaTrader 4, the MT4 platform. So I am back on the MetaTrader 4 platform, and I see that, at the top of the graph, I have different time frames: 5 minutes, 15 minutes, 30 minutes. Now, why are all these time frames here in the place? So let's try this out. Let's look at the Tech 100 as an instrument, and let's look at it, or maybe Dow Jones as an instrument, and let's look at it on a 5 minutes time frame. If I'm looking at the 5 minutes time frame, every candle here represents the movement for a 5-minute period. So there'll be a new candle that is generated after every 5 minutes. All right. So when I'm looking at, maybe in the graph, when I'm looking at a 5-minute time frame on a single screen, I may be able to look at the last 30, 40 candles or so, which means I'm able to look at the movement for the past maybe 1 hour. Now I look at, let's say, 1 hour time frame. Out here, every candle represents the movement for one specific hour. I'm looking at right now maybe 100 candles, which is 100 the movement for the last 100 hours, right? Which is maybe the last 3 or 4 days. Let's say I move to the 1 day. So the higher time frame that I select, I may be able to look at the graph more in the past, more in the history. So for example, if when I move to 1 day, I may be able to look at the movement out here for the last 1 year completely, right? And at the bottom of the screen, you see what is the month, or the year. So when I'm looking at the 1 day time frame, I may be able to look at the movement for the last entire 1 year, right? So that's how you may be able to analyze. Another aspect that I really want to explain is, you may have heard that gold really moves opposite to the US dollar. Now, this isn't no magic, but I'm going to explain the underlying logic as to why gold moves opposite to the US dollar. So let us come up to another screen. 1 second. Right now, I have the ZAO, which is mentioned, which is the symbol of gold, right? And the USD. So when you're trading on gold, you will be able to see ZAO/USD mentioned at the top. When I talk about the gold versus the US dollar, the only reason that these instruments move opposite, because they are being traded. The gold is being traded against the US dollar on the platform. That is why gold prices move opposite to the US dollar, right? So I have a question asking how. So that's what I'm going to be explaining. Let's assume the US dollar is right now weak, right? That's what I'm expressing out here, the downward symbol, which indicates that the US dollar is weak right now, which means the price for gold in that instance should move up. Why will that happen? Because the US dollar's value has decreased, right? That is why I need more dollars to buy that same ounce of gold, because the value has decreased, and that is why you will see the prices moving up, right? Against that, let's look at another scenario where the US dollar is currently growing strong. Assume there's an event, there's a data that has come out. Let's say like the data there is today, which is the non-farm payroll or the unemployment rate, right? Now there is an important data which is called the unemployment rate, which comes out on the first Friday of every month, right? Now, what does this? Why is there a lot of movement on this data? Because it comes out once in every month, and a lot of traders wait to see the kind of movement on this event or this data that comes out. So this is a comparative report that comes out on the first Friday of every month. So the US government announces what is the number of unemployed people in the country on the first Friday of every month, right? So when you talk about unemployment in the US, if the number of unemployed people is higher than the last month, that is a negative news for the US dollar, or that is a negative news for any country, what's as a matter of fact, because unemployment in itself is a negative factor. Now, if the number of unemployed people have increased, the government ends up spending more money as unemployment insurance to these people, right? That is one factor why the US dollar may become weaker if the number of unemployed people has increased as compared to the last month, right? So in this situation, I'm assuming we want the US dollar to be strong in this example. So let's assume that the unemployment rate has decreased than the last month, and that is why the US dollar has grown strong, right? In this situation, the gold prices need to be going down. Now, why will that happen? Because the value of the US dollar has increased. So I need lesser dollars to buy that same ounce of gold. And that is why you will see the prices going down. Let me give you an example of a few indicators, right? Since you guys are fairly new. So let us look at maybe what is Bollinger Bands. Bollinger Bands happens to be one of the most commonly used technical indicators. So I'm going to apply the indicator out here. So our sessions are going to be informative, one after the other. Because we're talking about an experience of more than 5 years that I hold, and I may not be able to tell you and explain to you everything in one session, right? So I would love to share these pieces of information, but that will happen with every webinar that we come across. Now I see these lines that go along the graph right now when I apply this indicator, the Bollinger Bands. And the basic use of this indicator is for you to understand the trend. So for example, a lot of places where I see that when the market is moving downside and it touches the downward line, it bounces back up, right? And these are the Bollinger Band lines. And on the other hand, when I see the market going up and touching up the higher levels on the Bollinger Bands, I see the markets moving down. Now, how can two lines define the movement of the market? The answer to that is these lines are being used by our traders. So who decides these directions of the market? It is you traders who decide the direction of the market. If there is too much of buying on an instrument, you may see the price rising up. If there's too much of selling, a sell-off that happened during the COVID crisis, right? If there is too much of selling, you may see the prices going down. And that's how the traders decide the direction of the market. Now, there are a lot of traders out there trading globally who are looking at this Bollinger Bands, right? Bollinger Bands is a universal indicator. It's not limited to MTrading as a platform. Any platform that you're trading on, you'll be able to use this indicator. So when the traders see the markets going down and touching the lower levels, you may have more traders start buying from those levels. And that is what results in the market moving up, and vice versa. Now, from here, we'll be looking at a few questions. Like I said, a lot of clients are on board or new. So we'll be looking at a few questions, which may be able to help them add up to the knowledge base. So whatever questions you have, you can start typing them in the chat box right now. Meanwhile, when we are querying questions, I want to share, right, the importance of time in this business, right? So a lot of clients would say that, why do it now? We'll do it later. Maybe when I'm free, maybe next month, maybe after 6 months. In this industry, one of the drawbacks is what I want to explain is when I am selling a product to you, right? I may not be able. Let's imagine I'm selling you a fan, right? I may not be able to sell you the same fan because the product is the fan out here. The market is not going to be at the same price, is what I'm trying to portray, right? If I am selling you a fan today and you come back to me the next month, and may not be able to sell you the same fan because the market price may have already moved, right? One of the biggest opportunities that I have looked at in this market is during the COVID crisis. I'm talking about oil prices, right? I'm aware, I think everyone knows that the oil prices have dipped down to as low as $5 during the pandemic, right? Now, I have had traders who've betted on everything that they have on oil from those levels, right? Because oil prices have moved from there. So I see there are a few questions. One moment. Okay. How will gold react in coming days? Okay. So all of you know right now, this question is by Vishwas P. And a lot of news that have been circulating in the market are about the inflation rates, right? Which means that the inflation rates are comparatively very high. And based on that, you may expect the gold prices to be moving down slowly and gradually, right? It is also possible if there is a change in the interest rate in the next few months, you may have gold prices moving opposite, right? So the gold prices mostly move upon the interest rate decisions, right? Which is an important factor for the US dollar. So like we discussed, a comparison between the gold and the US dollar. If US dollar is growing strong, you may expect gold prices to move down, and the opposite. So let's look at another question, which is spread calculation. I think, Mr. Akash, you're trying to ask us that how do I identify the spread on a specific instrument? You that is visible very easily on the platform. The difference that you see between the buy price and the sell price of an instrument is the spread. So that's how you look at the spread calculation. If that is not your question, Mr. Akash, I would love if you're able to elaborate and maybe tell me more about your question. Tell about MTrading company is what Mr. Sanjay wants to know. So MTrading is a trading platform which has a lot of assets available to trade on, including stocks of companies like Google, Facebook, Amazon, Microsoft. These are stocks that you could invest on from any planet of, from any part of the planet, right? You don't need to be an American citizen to buy these stocks, right? Just one moment. And you can go on the website and also look at the assets that are available to trade on. Also, the best benefit that I could talk to you about, there are a lot of competitors, I agree, a lot of trading websites available, but why I'm trading, the leverage that is 1:1000 is, I'm very sure, not a lot of brokers offer this kind of a leverage. Now, why a higher leverage is beneficial is because the amount that you need to trade is comparatively low if you're trading with high leverage, right? So nothing, when, like I said, a lot of clients do want to start small, and higher leverage will help you to start with a small capital to kind of test and understand how things work. So we have an application, we have an Android application also, which is available, which will be able to use to monitor your account, to check your account even when you're on the go, right? So you can look for more information. Also we have a feature which is called the copy trading. Now, a lot of traders don't have time, they're doing their job, they don't have the time to sit down to read news, to watch television, to watch news. So for those traders, we have the copy trading feature. What is copy trading? You know it is where your trading is done automatically by a master trader, by someone who has good experience in this business. So for you to check this, you can click on social trading, right? We have videos available for you to understand how you'll be able to connect with the right kind of trader. So you can just go to YouTube and type in copy trading, buy MTrading, and you'll be able to get that information. But the process is very simple. You just got to fund your account, go ahead and select the master trader who's going to trade, and your trades are automatically done and the profit is automatically added to your account. Just let's look at another question. Okay, I see a question by Mr. AB, right? No, this is by Mr. David, who wants to understand about Google stocks. The question is, if Google stocks which give movement to high level in last 10 years, is it a good time to buy the stock right now? What in that case if pandemic comes back? A very good question. no one may be able to predict what happens next. I mean, I'm talking about global affairs. Can someone predict the Ukraine-Russia situation? No. Can someone predict a pandemic? I mean, yes, now we know about the pandemic, but maybe in March 2020, no one would have known before March that, something like this would come up. So trading, yes, if you're buying this stock, yes, you would also need to keep backup, and also you would need to have patience, because stocks like these are more of a long-term investment. The other question, if we invested, by Mr. AB, if we invested more and more, mean up to 10 to 20 lakhs, is any surety for your MTrade company? The only thing that I can assure you, Mr. AB company, is excellent customer support, right? We'd be assigning a relationship manager to you, and based on that relationship manager would be able to guide you and support you, right? I'm very sure, based on the last 20 minutes of conversation, I feel and you understand that we know about this business, right? That we've been in this business and we've been doing it, right? And we've been successful and been growing only because our clients are able to grow their account by a certain percentage every month. Yes, if you're here to maybe convert your 20 lakhs to maybe 20 crores in 1 month, this is not the place, right? But yes, if you're looking forward for a small and gradual growth, maybe a 5% or 10% every month, that's easily possible, to be very frank. Looking at, maybe if you have that high kind of capital, you may look at instruments like the Dow Jones index, an index which has been here for the last maybe. So coming back to USA 30, I'm talking about, if you have this capital of 10 to 20 lakhs, 10 to 20 lakhs, I'm sorry, look at Dow Jones and as an index, right? When an instrument like Dow Jones, which includes the top 30 per companies from America as a country, the price has mostly been bullish. 5 years back, the price was maybe 17,000 for Dow Jones. Today the price is almost double, right? 34,000, 36,000, right? So there's a lot of information. See, I am not here to talk about a bigger capital. I'm here to impart information, right? And once you are on board, Mr. AB company, there's a lot of information that we may be able to share, right? Because maybe you think that trading is not something that may be profitable, but yes, once you have information, once you have the right kind of guidance, you may be able to, there is a very high chance you may be able to make some good money. And that is why this industry, the trading industry, has a daily turnover of more than $9 trillion. I see another question by Mr. AB company. Any auto robo trade available from your company? So when I talk about auto trading or a robo may not be able to predict or maybe understand fundamentals. What I mean by fundamentals, can a robo understand that what is a Ukraine-Russia situation, that Ukraine has been attacked by Russia or something like that? No. The robo may continue working on its algorithm, and it may fail, or it may end you up in losses, because the robo may not be capable enough to understand that there is a crisis or there is a pandemic that's ongoing. Another question by Mr. David. Thank you, Gaurav. Can you hold my 50 stocks of Google right now? Yes, Mr. David, you can go ahead and maybe create an application. And 1 second. You may create an application, and we'd be able to get it. My relationship manager may be able to get in touch with you, and you may fund the account, and that's how we may be able to move ahead. Are there any other questions that anyone has? I would love to answer. I think there are no more questions. So I think it's time to end this webinar. And I do want you guys to keep visiting and keep attending these webinars. One thing that I can assure you is a lot of information that we may be able to impart through these webinars. We also have a YouTube channel where you may be able to log in and view every little thing that is available on the platform through these YouTube channels. And for our next webinar, we have one of our speakers, who is Mr. Rajiv Jetwa, right? 1 moment. Okay, who's Mr. Rajiv Jetwa, and this webinar is going to be conducted on the 7th of June. That is a Tuesday. That's the same time, 5 p.m. to 6 p.m. And the topic for this webinar is going to be how to trade on indices, right? So like I discussed on this webinar, USA 30, Dow Jones, Tech 100, all this is going to be explained in detail in the next webinar. So it'll be really informative. Also, like I said, YouTube is where you may be able to look at all the webinars that we've conducted in the past, which have been informative. So you may be able to visit and view everything that we have on board, right? Now I see Mr. Vishwas P has messaged that he got to learn a lot of things today from Mr. Gaurav. Today's webinar was value for time, and to be honest, you guys believe you must be seeing. Okay, so thank you, Mr. Vishwas. I think this has been really informative for you, and we wish to keep doing this in every webinar. So thank you so much for attending this webinar. Perfect. Another message by Mr. David is that he'll be learning with Mr. Rajiv on the best in trading. Perfect. So thank you so much, guys, for attending this webinar. I would love to connect with you in the next webinar, and in the next webinar you have Mr. Rajiv Jaitwa. So that's it from our end today. Thank you, everyone.